Hey everyone, happy Wednesday. Excited to be with you today to go through our next financial planning topic. Today, we're going to be going through disability insurance and talking about it for court reporters. What are the things you want to look out for when reviewing disability insurance options, and hopefully give you enough information so you have a good idea of where you want to start and how to get that in place. So let me share my screen and pull up the presentation we're going to go through today, discussing the disability insurance. So first and foremost, I want to talk about how disability insurance works. And there's a few different moving pieces and mechanisms involved with getting disability insurance. And before I dive into this, I do want to clarify for our conversation today, I am going to focus on long-term disability insurance. The reason being is that long-term disability insurance really, it kicks in on here. It says waiting period of 30 days, but typically most long-term disability insurance policies would kick in after being out of work for 90 days. And a couple reasons I want to focus on that sector. First and foremost is that's the bigger issue. Most people have emergency funds and have assets built up where they can survive the first 3 months of being out of work and be okay. So we probably don't need to have insurance in place there. The other reason I bring that up is that specifically for court reporters, disability insurance, even long-term disability insurance, is extremely expensive because the odds of you being out of work for a period of time are really high, right? You could just break a finger and not be able to do your job for a period of time. And because it's so likely that you would be on a claim at some point in your career, that's factored into the price, right? They ask for your occupation when you apply for disability insurance. So short-term disability, it's going to be so expensive that it really would not make sense to ever buy a short-term disability insurance policy. So we'll focus on long-term disability insurance for today. So first and foremost, what is long-term disability insurance? Long-term disability insurance is an income replacement policy. So essentially, if you're not able to work, and we'll get into what that definition is, but if you're not able to do your job, then you'll have income coming in to be paid out to you. And this is usually called like your monthly benefit. And so this could be $1,000 a month, $2,000 a month, $10,000 a month, right? And so it's not necessarily tied to your medical bills or your expenses or anything like that. It's really tied to the size of the policy that you want to buy, which you can choose a different amount based on your needs. So it's just going to basically pay you that set amount every single month until you go back to work or until the end of your benefit is paid out. You can also add different features to it, like inflation riders as well, where it'll increase like 3% per year with inflation. So there's little nuances there, but in general, it's basically just getting a guaranteed paycheck coming in the door while you're not able to work. So I mentioned it a little bit a second ago, the waiting period. This is a big thing to look at when it comes to disability insurance, because it's important to know how long is it going to be that I'm not working until I start receiving benefits. So the shortest waiting period for a long-term disability policy could go all the way down to 30 days. This says to 365 days a year. I have even seen policies that don't kick in until you're out of work for 2 years. That's usually the longest. And as you can imagine, the farther you push out that date, the lower the cost is going to be of your policy, because most disability events, let's say you break your arm and you get surgery, that may only be 3 to 4 months that you're out of work. So you may only get 1 month of benefit if you're doing like a 90-day waiting period. If you did a 1 year waiting period, that policy would never kick in. You would never get any benefit from that. The next piece is the benefit duration. So the benefit duration is how long are they actually going to pay you from the time your benefits start. So you can have different levels of benefit where maybe it'll pay you for 1 year, 10 years, right? So how long is the benefit going to get paid? And then lastly is the tax status of your disability insurance. You can either have an after-tax policy or a pre-tax policy, especially if you are an official and you have a policy through the courts. That policy is usually a pre-tax policy. So whatever benefit they say on that policy, you're actually going to have to count that as income for that year and pay income taxes on the benefit that you receive. Typically, if you're buying a policy on your own, you do not want to take any type of tax deduction on that policy. And then because you didn't get a tax benefit for the premiums you're paying, that means that the benefits that you receive, you get to get tax free. So you could have a $2,000 a month benefit policy, and all that $2,000 a month is going to be all tax free income for you to spend. So why do court reporters need coverage? First and foremost, like I mentioned, are the occupational risks that you have. Having more severe injuries or permanent disabilities could come up, such as like carpal tunnel syndrome, back problems, right? But even something simple as slipping, going to get the mail, and breaking your wrist and needing extensive surgery on that could be something that warrants a policy paying out to you and getting some type of benefit. So it's so easy for you guys to be out of work. So it's really important that you have not only just a disability insurance policy in place, but really an emergency plan in place. How long can I go without having income and be able to fund my life with just your emergency funds and your savings? And then if I get a policy, how much will that help supplement that money and make it last? And how long can I really go without having to pull from other accounts? Also is on the financial side, you don't have any benefits through your work. So that's a downside. There's nothing that's helping you through an employer. If you're a freelancer, you have to do everything on your own. So you have very little like benefit or support besides maybe some state support. That really is never that good. Also is just there's high medical expenses these days. So you could be out of work and not only you don't have income coming in the door, but you're also racking up medical bills as well on top of that. So it's double compounding as far as the impact that it's having for you. So when should you get coverage and have coverage in place? Here's a couple just standout times where it could be important to get this. First is early in your career. So if you're earlier in your career, that means you're younger, you're going to be a bit healthier. And when you do apply for disability insurance, you do have to actually apply and submit an application. Usually a medical exam has to be done as well. And so they're looking for pre-existing conditions and things that they're not going to cover. So the earlier you get a policy in place, the more broad coverage you're going to have. There's not going to be any exclusions. And you know that you're going to have those benefits pay out if anything comes up. Also, being younger, age is factored into the price as well. So you can kind of lock your policy in at a lower rate than if you were waiting till later on. If you skipped that early on window and now we're farther in your career, taking on any type of major debts could be a good reason to want to have a policy in place. Maybe you want something that just covers your mortgage, for example. So you get a policy that equals the exact income need to cover your mortgage every month. So maybe if you're out of work, you're still losing money, but at least you know your mortgage is taken care of and that's covered. So you can look at different strategies like that. Also, supporting dependents is a big one. Once we have kids, that just means that there's more expenses and more fixed expenses that are never going away no matter what. And we will need to make sure you have coverage in place there. And then lastly, I mentioned is that if you're a freelancer, then you got to do everything on your own, right? You have no benefits through work and maybe just some small state benefits that you probably don't really want to deal with any type of government program. So if we can have independent coverage in place, that'll make sure that you have some protection at least. Occupation definitions matter. So when you look at getting a disability insurance policy in place, in the fine print, buried somewhere on page 15 to 20 is going to be the occupation coverage and the definition of when you receive your benefit. So the way that these policies are structured is in there, it'll either say that if you can't do your own occupation, you'll be paid, and others will say any occupation. And you could probably pick up what they're saying here in the name, but own occupation means that if you can't be a court reporter specifically, even if you could do another job and earn income doing something else, the policy will get paid out to you. So I always like the own occupation because it's really protecting you in your career that you have. Any occupation really means that if you could do any job whatsoever and earn income, then you're not going to be paid out. So it's got to be a complete and total disability. So these policies are going to be significantly cheaper, which is the only benefit. The downside is you're probably never going to get paid from this policy. It's really got to be a total disability. Also, the type of insurance companies who offer this type of policy are probably not companies that you want to work with. And they're going to be the type of companies where you have a claim and they're going to try and get out of paying you that claim and look for ways that they don't have to pay you. So I would stay away from any occupation and make sure that you have an own occupation definition in your policy. Now, another option that's very common is a modified own occupation. And this I actually don't think is too bad. I like this one as well. And a modified own occupation means that, let's say you have a disabling event, you're not able to be a court reporter, but you're like, hey, I'm bored sitting around at home. I could still get a job and do something. So you go out and you get a job in a completely different field, or maybe become a teacher for court reporting and you're an instructor, mentor, tutor, something like that. Now you're earning income. And so the insurance company would say, okay, I know you're not making money doing court reporting, but you found a different career path to make money elsewhere. So we're no longer going to give you a benefit anymore because you were able to get back on your feet. That is what a modified own occupation means, is that once you start working again, they won't pay you a benefit. Now, typically with a modified own occupation policy, they're still going to pay you if you make less. So let's say you had a policy that's supposed to pay you $5,000 a month and you get a new job and that job's only paying you $2,000 a month. They'll just pay you $3,000 instead of the full five. They're still going to make you whole. They'll still pay that full amount, but they're going to discount it by whatever you're making in your new job. So now when we think about the coverage amount that you want to have in place, this is something, if I'm not talking to a court reporter, that's irrelevant. I just go for the full coverage most of the time with a software engineer, someone in a different field, because usually they have coverage through work. So they're halfway there and we're just supplementing on top of work coverage. But also they're not usually in an occupation that's so likely to experience a disabling event, even if it's for a shorter period of time. So when it comes to court reporters, we got to think about price versus coverage and benefit, right? These policies can get up to $400, $500, $600 a month, which is pretty insane to be paying for something that you may never use. So there's different ways that we can look at structuring coverage levels. So first and foremost, I mentioned that you may want to just cover fixed expenses only. And in that situation, you're only looking to cover your mortgage, right? Having income to replace your mortgage payment. So you don't have that as your monthly cash flows, but you still have to pay for everything else. That could be a cheaper policy, or just covering like your basic needs in place. Next could be basic needs plus a little bit of discretionary. It would be like kind of this essential plus coverage. So maybe you want to cover all your fixed expenses and a little bit of discretionary expenses as well, but you don't need to bring in the same level of income that you're making, right? If you're making $10,000 a month, maybe you only need coverage for $7,000 and you can get by off $7,000 a month and save a little bit on the price of your policy. We don't need to do the full 10. And then lastly, like I said, it could be $400, $500, $600 a month for some of these policies, but you could have full income coverage. So you make $10,000 a month, you get sick or injured and you're out of work for more than 90 days. Now you're going to get $10,000 a month coming in to completely replace your income until you're able to go back to work. So that's obviously going to be the most expensive. So we talked about benefit period options. This is something to consider when you're getting your policy, again, as like a way to mitigate costs and think about what option you want. These are the typical options that I see with different firms or insurance companies. Usually they have a 2-year, 5-year, 10-year, and then like an age something benefit, age 65, 67, age 70, somewhere around their benefit. So you can pick up what's happening here, right? So a 2-year benefit means you get sick or injured today. Then after your waiting period, let's assume 90 days, after 90 days, on the 91st day, you'll start getting paid. And you'll get a paycheck coming in the door every month from the insurance company for up to a 2-year period. After 2 years, if you're still not working, well, you're SOL at that point. You're not going to be getting any more benefit at that point. You're going to have to figure out emergency funds and other accounts to start using to basically pick up where that left off. I will tell you the average disability, the average time someone is out of work is 2.1 years. So a 2-year policy is going to cover the average, but I think that's pretty low. I would at least want like a 5 or 10 year to cover most situations that really is covering anything besides a total disability event. So with the 5 and 10 year, you're just getting a bit more coverage. And then lastly, age 70 is a policy that will just continue paying you until you're 70 years old or until you're better and you're able to go back to work. So obviously that's going to be the most expensive option in these choices, but it's going to give you the most protection. I do get a question sometimes, what if I go on a disability event and then I recover and go back to work? Let's say you have a 10-year benefit policy. You go out of work, you're out of work for 2 years, and then you go back to work. It's like a bank. You've used 2 years of your 10. So you can go back to work. And then if you have another disabling event in the future, you still have 8 more years left of benefit. So it's not like you use it once and then it's done. You do pick up back where you left off after using the 2-year benefit. And you can check the fine print on those policies as well to make sure. I have even seen policies where it resets. Like if you go back to work and your next disabling event is something completely unrelated to the first disabling event, you get another 10 years. So you could check the fine print on your policy and see if you cared to get into the weeds on that. I think what's most important is really covering just one disabling event. And I would say 5 or 10 years would be the minimum metric that I would look at. So cost management strategies, right? As you can imagine here, there's different ways that we can lower the cost like we've talked about so far, such as like extending the elimination period, that waiting period in your policy, looking at adjusting the benefit amount that you're receiving, also looking at the benefit period as well. So when I think about building a disability insurance policy for someone and lowering the cost, my order of operations would be number one, looking at lowering the benefit period, right? The difference between an age 70 policy and a 5-year benefit policy is pretty drastic, right? The insurance company is going from being on the hook for 5 years to maybe 20 years, depending on how old you are. That's a big difference in how much money they may have to pay. So that's going to significantly lower the price of your policy. The next thing I would look at would be lowering your waiting period or your elimination period. So instead of doing 90 days, you have to be out of work, you could do 180 or 1 year. So you really got to be out of work for a longer period of time to start receiving benefit. The reason why I'm okay with that one is because you could basically just have a bigger emergency fund to help cover you for that 1 year or 6 months until you need to start collecting income from the policy. And then once you do start getting income, you're going to get your full amount. And that brings me to the last piece that I would lower, which is the benefit amount that you're going to be receiving, right? If you need $7,000 a month coming in, the first thing I would do is not lower it to 5 or to 4. I would look at those other pieces. And the reason being is just because you need that full amount to cover those fixed expenses, like I mentioned. You need it to cover medical bills. There's going to be more expenses than just your current lifestyle. And so I don't want to lower that benefit if I don't have to. At least have a certain period of time that you're getting this full benefit paid out to you. And so I would really focus on benefit period, how long you're getting paid, and the elimination period before looking at adjusting your benefit. Lastly, sometimes there are group or association discounts. I don't think I've seen anything from like the NCRA groups or anything like that, but definitely double check. Sometimes you can get a group policy with those associations where, you're getting a little bit of a discount because they're insuring the whole group and they know the rule of large numbers. Some people will get disabled, some won't. And so they're mitigating risk by insuring everyone in that group. Definitely check that out and see if there's an option available. So lastly is, okay, I've had this policy and I'm getting fed up with the premiums that I'm paying on it. When can I cancel this thing? So there's a few different points where you may want to cancel. First and foremost is when you've reached financial independence, which to me means that you're working because you want to and not because you have to. So this could be at different ages for different people, but if you're 55 years old and you have your retirement accounts fully built up and you're really just working because you love the job and you want to keep going, but if you needed to retire tomorrow, you could. That would be a good stopping point in paying for this disability insurance. If you are doing a policy that's covering things like the mortgage, if you pay the mortgage off or you only have a year or two left, you're in the final stages of that, it may be a good point to get rid of that policy. Also, passive income that's built up. So if you have rental properties or businesses that you're investing in, basically anything that's going to pay you fixed income, regardless of whether you're working or not, that's basically an insurance policy in and of itself because you have this income you know is going to be coming in the door every month. And that's your own protection there. And then lastly would be approaching retirement. So if, again, like if you're financial independence or also you're within a few years of stopping working for retirement, you could either retire now and live off of a little bit less or spend down some of your savings in your business accounts that you probably had in cash anyways to get you closer to retirement. And then you can decide if you need to work a couple more years or not. Or lastly, is that you can just pick back up where you were working, get back going again, and then get to retirement when you're ready, or start collecting Social Security earlier, or even maybe have a long-term care policy where if you experience a disability that far into your career, maybe at that point it's probably going to be a long-term care thing and not a disability insurance thing. So you can get rid of your disability insurance and buy long-term care insurance instead to cover those type of events. I will say, I wouldn't always think black and white. Do I keep it or cancel it? You could always look at changing the policy as you get closer to retirement. Maybe if you do have less debt, if you have passive income built up, maybe you don't need a $10,000 a month benefit anymore. Maybe you can get away with a $3,000 a month benefit. So you can usually just call the insurance company, lower your benefit amount down, and they'll just directly reduce that price as if you had a $3,000 policy the whole time, and you'll just pay that lower cost. So next steps to go from here, we want to assess your current needs. Like I mentioned, I would do either like a cash flow or a budget calculation. What are your fixed expenses? Is that a good starting point for you to cover? What would be enough to just cover everything but not be able to save any money? So just bare minimum to get by fixed and discretionary expenses. How much would I need if I was covering like my full income and covering everything that you make? So get different metrics that you can work off of and ask an insurance agent to run by. Number two, compare policies. I would get quotes from different carriers and see different options that are out there. Although I recommend comparing different policies, do your research on who are the top disability insurance companies. One of the biggest ones is Northwestern Mutual for disability insurance coverage. The reason they're big is because when you go on claim and you need a benefit, they just pay you out right away, right? They don't try and scam you on the back end and figure out how they're going to get out of paying you. So you want to work with a reputable company because the last thing you want is to have this disabling event and then not have, the income that you need or be fighting with the insurance company to get paid. So you really only want to look at the top 3 to 5 companies when you're researching different policies. Again, as I mentioned, as you're going through those different policies, make sure that it's own occupation or modified own occupation. That's very important to make sure you're going to get paid. And then lastly is work with a financial advisor like me to help you review your options and make sure that you have the best policy for your needs in place. With my firm individually, we actually do not do any insurance for our clients. We don't earn any commissions so that we can stay unbiased. So I'm always happy to help people evaluate their options and see what's the best fit because I can really come look at it from a third-party standpoint without really any benefit to gain if you go from one direction to the other. I also do have insurance agents that I refer people to all the time. So if this is something that you're thinking about and you want a referral to an insurance agent to help you get this in place, definitely shoot me a message on Facebook and I can point you in the right direction as well. So that's everything for today. Let me know if you have any questions or comments. And yeah, I'll talk to you all again next week.